Hey traders, welcome back to another Sunday video where we talk about setups for the week ahead. We're going to be taking a look at indices, commodities, and a little bit of FX today. Let's jump right into it and start out by taking a look at the S&P 500, which had the Twitter bears came to life this past week. Finally, we saw a little bit of a pullback in the indices, and I wanted to talk a little bit about this, give you my take on it, where I'm at with the indices, how I'm positioned, and how I plan to be positioned for most of the rest of this year unless something changes. And that is, long story short, I'm still bullish. That being said, we were very due for a bigger pullback, and I'm actually really happy to see this pullback starting to form on things like the indices that I watch the most, like the S&P 500, the Nasdaq, the Dow Jones, and the Russell. So we saw a little bit of selling here this week, and in fact, actually really impressive selling. If you take a look here at the last three bars, what we can see is 1, 2, 3 red candles, pretty solid ones at that, coming into this market. And pretty quickly, when we actually apply the moving averages here that I've got on the screen, this gray one is the 20, this is the 50, and this is the 200 moving average on the daily chart. What we can see here is we breached the 20-period moving average, and it seems like price is making a quick push for that 50-day moving average on the S&P 500, which actually lines up with a pretty key level of support at 54.50. Now you might be saying, well, Nick, isn't it a little too soon to be calling the bottom of this pullback? Well, let's take a look at how the S&P 500 has recently been treating these pullbacks. Well, during the majority of this very strong bullish run, we've seen very shallow pullbacks. In fact, let's do a little bit of an experiment here. We can see here that this is like a 1% pullback. You know, there's a 1% pullback. Here was a 3%. Here was a 2%. Here was another about 2%, let's call it, a 2% here. And what you can see here is that there's been very, very few pullbacks that go beyond about a 2% pullback. And what we can see here is that there was a little bit of a bigger one that happened in April. This was a chance that I actually took advantage of. I went long technology, XLK, the ETF, right around this area here. Ended up being one of my best trades this year. In fact, I think it is my #1 trade of the year. So how do I play these pullbacks? How am I looking to play these pullbacks? Well, let's take a look at how far we've pulled back so far. We've actually done about a 3% pullback. And let me just get out in front of this and say, I know people are going to say, Nick, you know, you're looking at this through the lens of a bull market, but that is exactly the point. This is a bull market, and until the bull market breaks, I'm looking at a 3 to 10% pullback as a very good buying the dip opportunity until proven otherwise. And what I mean by that is that as we see the S&P 500 make this retracement move back down, I am looking at levels like 54.50 with the, again, bull market on the side of the bulls. That's kind of the idea of the trend. I'm looking for an opportunity to buy this dip. I have already bought the dip with my first attempt last week being a little bit early on the Nasdaq. So you can see this dip here at about a 4% pullback. I went long, triggered some long positions on the Nasdaq. That trade was a very early entry and did not work out. I then took a second entry on Friday, which started out not great. We didn't see much of a reaction on Friday to this level, but I still like this area of support, so I am long the Nasdaq with a stop below. Now, you might say, well, Nick, why didn't you just wait to take your second entry first? Well, when I take entries, I talk about this frequently on my videos. I am looking for pullbacks and willing to try more than once to get into my entries, because I willfully admit, although it doesn't seem very popular on social media to do so, I willfully admit that entries are very difficult and it's very hard to time the market. So instead of trying to be picture perfect and, you know, sniper entries and all that, which looks great on Twitter posts when you only post the ones that work, instead of doing all that, I like to take multiple attempts, and I try and, you know, keep it real with you guys. When I take a win or take a loss, I do my best to share what I'm looking at and, not just speak in hindsight. And I made that point on Friday, and a lot of people in the comment section said that they appreciated that. And I just want to say thank you for your support on that. I do my very best on social media not to cherry pick and just show you winners, because I think it is, the ego stuff is not very helpful to the trading community. I think real, authentic trading is helpful to people who are out there really trying to learn this stuff. So with that said, I also want to talk a little bit about the commitment of traders data, because I saw this and I thought it was very interesting. On Friday, every Friday, we get the latest round of commitment of traders data. And what this shows us is what institutional money is doing on a week-to-week basis. Now, you might say, well, this feels illegal to have this kind of information. Well, it's actually perfectly legal. The CFTC puts out, they require large institutional money to present what they are buying and selling on a week-to-week basis. The problem is it comes out in a terribly ugly text file. So my company, A1 Trading, we're a software company out of Atlanta, Georgia. We build tools for traders. We've built this whole dashboard of many different factors, but you can see it just updated there. And this data is now easily digestible. So what we can take a look at is the overall positioning as well as the week-to-week filing. And there's something really interesting here that I want to show you. First of all, gold, US oil, GBP, silver, USDs. These are some of your things that are on an institutional basis. These are the most proportionally bullish things. On the bearish side, you have the Swiss franc, the Canadian dollar, the Japanese yen, 10-year treasury bonds, and the Russell. But keep tabs on this, because as much as this information is useful, this is more of a longer term indicator of what institutional money is positioned for, because this doesn't change a whole lot week to week. And if you've been watching my videos, you know that they've been long gold like all year long. That doesn't really change very much week to week on a kind of all inclusive basis. It shifts very little per week. That being said, we've also built this secondary table which allows us to look at the latest week-to-week buys and sells by institutional money. This is my favorite table when it comes to COT data. So check this out. So what we saw is that on a overall net percentage basis, we saw big buying on things like the Nikkei, the Russell, which is another one that I'm watching very closely. The Dow Jones got massive buying. We saw the pound, the US dollar, Japanese yen, euro, Aussie, copper, Swiss franc, Nasdaq. These things got bought by institutional money. Let's also have a look at some of the sells. We can see they sold some gold, they sold silver, platinum, the 10-year treasury bonds, NZD, SPX. So you might say, well, Nick, what do you do with this information? If, for example, you're somebody in the audience who really likes to talk gold, which we'll talk about in just a moment, you might say, well, they sold gold on a week-to-week basis, but the overall positioning is still very bullish. Well, we actually score this in a pretty creative way. We consider both the net positioning as well as the latest week-over-week filing. And in the top setups page, when we take a look at gold, for example, we can see that we actually get a neutral reading on gold, because let's think about what we just said. The overall positioning is bullish, but the latest week was bearish. So we get a neutral reading in the commitment of traders data scoring of how the system is finding setups. That's just something I wanted to touch on as an example, but the top setups page looks at lots of different data, economic data, sentiment data like the commitment of traders, retail positioning, technicals like seasonality and the overall momentum, and it factors in all of these things to give us bullish and bearish readings. Now you can see I am long Nasdaq, as I mentioned. This was part of the reason why I was looking for those Nasdaq longs, is because it showed up on my watch list. But the institutional interest in the Dow Jones, let's go look at that again, because look at this. The Dow Jones is rising in the ranks here. On the overall net positioning, it's about 66.6, which is pretty long bias. But this latest filing was huge, a massive swing. You can see that on the number of long contracts that institutional money changed, it was a huge whopping bullish shift, and they only added just a little bit of shorts. So they added both, but they significantly added more longs, resulting in a pretty bullish net change on a week-to-week basis. Again, if you would like to try out this tool for 30 days, there is some information down below in the description. You can also pick it up for a discount using the promo code that's in the description as well. So if you'd like some information about how you can get access to the Edge Finder, it is my company's primary tool. We've worked on it for a couple years now, and I have a wonderful team of developers and helpful team members that help us to support this product and this ongoing project to making it better. If you'd like to try it out, or you'd like to get more information, all of it can be found down below in the description. Next up, let's talk gold. And This one's a little bit of an interesting update in case if you're someone on my channel who only watches like the Sunday videos and you don't watch my day-to-day videos, you may not have heard this, but I did end up getting trailed out for profit on gold right around this level here. Now I bring that up because now you can see that I've added a new position. I'm right back in long gold, and the reason for this, as I've mentioned on my Friday video that I did, is I looked at it and I said, you know what? On an overall basis, I still very much like the long setup for gold, even though we kind of failed out up the top here, right? Not only did we erase this big green candle, but we had several long wicks across the top, suggesting short-term bearishness. But the overall upward trend, I think, is still intact. We've seen a pullback to a pretty healthy area of support, and I'm taking a stab on the long side, but I discussed this in my video on Friday that my positioning size on this trade is significantly less than it was the last time around when I went long around here. So the reason I point that out is because I did like the technical setup a lot more when we were pulling back in this area. And this break of structure is a little bit concerning, but again, fundamentals to me are the number one factor when I come up, with an idea. The number one thing I'm looking at is the Edge Finder, the top setups page. We've got a gold bullish reading here. Okay, great. Then I look at the technicals and I say, do I have a setup here? I liked it on the daily and the 4-hour chart zone. You can see this level here and this trend line. I like the long setup. My stop is in place in case I'm wrong about this. So I have capped my downside, but I think I have upside. That's my basis on this. And I've recently been discussing this topic a lot about, when it comes to setting up trades, I don't know if this particular trade is going to be profitable or not. I think a common misconception about profitable trading is thinking that a successful trader knows what's going to happen in the markets all the time, and that is actually very, very false. A great trader actually is completely the opposite. They accept, acknowledge, and adapt to the idea that they don't know with certainty what's going to happen, and instead they play the law of large numbers game, where they risk small per trade. They accept that this one trade may work out or it may not work out. But if I keep taking the same types of trades with my strategy, I will make more in the end. It's almost like the casino model. And I discussed this on my Twitter. A casino, they actually engage in gambling every single day, right? They're constantly gambling. The difference is they're playing with the edge in their favor. When you sit down and, play roulette at the casino and you are both gambling. The difference is you don't have an edge, the casino has an edge, right? So when I talk about this with trading, I've taken some setups this week, and I want to just reiterate that I've been on a good streak recently that has kind of come to an end, right? I've had a couple losses come into my trading, which is, nothing new to me, but I've been on a win streak before this where I have admittedly felt a little bit invincible. I've had so many winning trades. This year I have not taken a red month, which is rare for me. So anyways, without getting too far into that, just wanted to point out that equal expectations for each setup when it comes to my trading. I'm not certain about anything. I'm just trading with good risk management and doing my best to kind of stick to the plan. Anyways, I also mentioned the Russell, so I wanted to bring this up. This one I'm going to be picky on because the Edge Finder is giving us bullish setups on the Russell, but it's only a +5, so I'm going to wait for this technical pullback, if it happens, to the 61.8% retracement. With this really big run-up on the CPI day, this was CPI, which was basically a celebration of rate cuts are likely coming. Interest rates fell hard on the bond side, the 10-year, the 2-year, 20-year, those things fell a lot during this time. They've since gone back up, and so, it's been putting a little pressure on the Russell, which was celebrating so heavily the idea of rate cuts. Anyways, I do like the trade. I am looking for a long setup on the Russell, and it goes well with my TLT trade, which I'm still in. I'm not logged into my brokerage right now, but if you've been following the channel, I'm watching TLT a lot. Anyways, silver took a big beating this past week, 3 red days, and actually lost a couple dollars per ounce on the spot price, down $2.31, which doesn't sound like a lot, but silver's only valued at $29 an ounce. So that was a pretty big haircut there for that. I also wanted to mention the Dow Jones, another very, very interesting setup to me. If we keep seeing the markets dip further, I am watching the Dow Jones. Although I do like the Nasdaq and the tech side of things a little bit more, The edge finders give me a really solid setup on the Dow, so I am watching it for a possible pullback setup to get long. And I do think that this is, you know, you're having some bearishness creep back into the market. A lot of people kind of calling for, oh, I told you so, it's going to keep crashing. You know, I just don't see the bearish catalyst yet. Now, if you come to me in 3 weeks, in 5 weeks, and you say, Nick, the earnings for big tech were awful, then I'm going to talk a little differently. But right now, we don't see that. We've seen really good earnings expectations going into earnings season, which is starting really to kick up this coming week. By the way, I believe we have, I think it's Apple, or there's I think Microsoft might be going first, but there's a couple big tech companies coming in and reporting their earnings. So the whole market is going to be watching that. At the end of the day, this pullback could either be completely erased, or it could really accelerate depending on what happens there. That is why I'm keeping stop losses on my trades, definitely, as I go forward with that. Let's talk the dollar for a second. So the dollar index broke lower here, retested, and actually started to break back up. Dollar index, I'm keeping an eye on it, but that momentum for now may have paused, and we may actually see a push back up into this 105 level, at which point I may look for more short opportunities on the dollar. I do still like the idea of a dollar weakening trend. And just a side note on the political front, if Donald Trump does become president, the Republican Party has made a push, or it seems in their objectives economically, they want a weaker dollar, especially with all the tariffs that they're suggesting or looking to do and put in place. If that happens, our import costs are going to be much higher, and with that, I'm sorry, import costs into the U.S. if countries are sending goods to us, the price of those goods will go up. Now, the reason I point that out is because that might encourage a little bit more manufacturing in the U.S. to make goods that are comparable to imported ones, since the tariffs are going to be in place. Now, if that happens, could there be some inflationary impacts from that? I think a lot of smart economists would say yes, if you place tariffs on things. Now, is that all negative? Without getting too far into my breakdown on Donald Trump's projections, the cutting taxes for corporate entities, especially if you guys saw Mark Zuckerberg talking about Donald Trump, he was pretty favorable towards him. So I don't know. I think big companies would love it, especially big tech CEOs. You might say, well, that's money in their pockets. Again, if you're getting into the economic theory of it, lowering taxes could theoretically actually increase tax revenue for the government, right? Because they would pump companies to make a lot more tax revenue. Anyways, that's a whole nother avenue, and certainly not my professional territory. But from a market's perspective, the Republican Party, if they do take power, seems to want a weaker dollar. And a weaker dollar helps with exporting, right? Because you can export more competitively U.S. goods, etc. And services. So the dollar index, that's kind of a trade that we've seen recently, some dollar weakness, both from weakening economic data from like PMIs being in the deterioration zone under 50. In fact, let's look at PMIs, just because I don't want to quote something without showing you data. That is the purpose of our tool, so why not show them? Let's go to services PMI for a second. Excuse me. And so what we can see here is that when you get a PMI level under 50, it shows decline. And so in the services component of our economy here in the U.S., we are looking at a decline, right? So we've actually seen the economy start to cool a little bit, arguably because of the Fed's higher interest rates, which are starting to show the effects in the economy. We're seeing a little bit of slowdown. Growth was growing at a much faster pace. We've started to see growth kind of normalize or come down. We're not in a recessionary territory or anything like that at this time, but growth is certainly slowing. And we also see at the same time labor data like unemployment claims trending higher overall. We also see unemployment rate. We'll take a look at that right here. You can see this, if it loads, has been trending up. And if it doesn't load, then just you can pull it up on your own. I'm not sure what's going on. We might be pushing some updates or something like that. But jobless claims also have been, job openings in the U.S. have also been going down. So my point with showing you this is that the labor data seems to be cooling, not necessarily crashing, because if you take a look at the last several years, you can see that we're just kind of coming back to pre-pandemic levels for job openings. But there's certainly been a cool in the labor market, and that cooling in the labor market has shown up in a bit of a weaker dollar as estimates for rate cuts this year have gone up. It's part of the reason why I'm also bullish gold, silver, and indices, because as long as we don't see a recession, if we do see a recession, then I really like the idea of staying long gold. And if we don't see a recession, then the indices are going to pump like crazy. That would be my take on it. So we'll see. But and which do I think is going to happen? I don't see us going into a recession at this time, but there is that possibility. That is why I do like the long side for gold, and more specifically why I have a position in TLT. It is a bit of a hedge because if the economy goes into a recession, TLT will likely do really well. That is bonds, and people will flock to bonds in a time of fear, as well as lower than anticipated inflation rates going forward. I don't want to get into that topic. I know bonds are a complicated matter, so we'll stick away from that for now. But let's keep pushing on. Let's take a look at some currencies for a moment. And what we can see here is that the euro tried to break through this high here, fizzled out. I'll be watching to see if we can get a strong break above. If we do, I'm looking for higher prices. I am generally more on the bearish side of the dollar. Pound USD, a pullback looks really interesting at 1.285. Dollar yen, break and retest. I want to see how that one plays out, but don't really have a strong bias. I am already short on USD CHF. I've got my stop loss in profit. If we put in a lower high, then I'll be looking to trail that stop further into profit. If we take a look at USD CAD, I'm watching this one for possible breakouts through these highs. In fact, we can go ahead and mark up that area here as kind of a level of resistance on the daily. So we'll watch that one close. Aussie dollar pulling back, and although it's a technically pretty setup, I gotta check to see if this is a setup on the edge finder for me. So if we take a look at AUD USD, it is not on the bullish list of assets. You can see it's getting a neutral reading, so that would be a no-go for me. And I always check the edge finder if I like a setup, even if the setup is really pretty technically. I personally will almost never pull the trigger on a trade unless I've got edge finder confirmation. That is just, you know, we've worked so hard to build this tool into what it is, to take into consideration so much economic data. I find it very hard to ignore those setups, and I find it also very, very ignorant of me to assume I know better than the system that I built to help me spot setups. The edge finder is by no means a perfect indicator of where the market's going to go in a straight line by any means whatsoever, but it is a wonderful tool to help spot trends in economic data, technical sentiment, without poring over the data yourself for like 3 hours a day. So that is the purpose behind the edge finder. Remember, you can try it out 30 days down below in the description, or use that promo code to get a discount on the tool. Finally, NZD USD really selling off here recently. And I don't actually follow very closely what's happening in the RBNZ, the central bank for New Zealand, but I believe there was a dovish kind of commentary recently. Again, I really don't have too much to add on that, so I won't speak on it, but it is an interesting one to say the least. Bitcoin has traded higher over the weekend. Feeling a little bummed on this one because I was watching this candle come down. I discussed this on a video last week. I was looking for bullish setups because the edge finder actually had a bullish setup on Bitcoin. So I was like, okay, let's play a Bitcoin trade, and price broke out here really strong, and I missed this pullback, but I was watching it. So as price came down, it started going back up. I didn't get in on the trade because I was waiting for it to, if it was going to come back, I would get into it, but it never did, and it left me behind. So I'll be watching. If we do see a pullback into this area, 63,000, I may take a stab at this one, and we'll see how that goes. If I take that trade, it will be shared inside of our Discord channel, which is also linked in the description down below. Also, if you're looking to trade with a better brokerage on TradingView directly, there are several linked down below in the description. The reason I mention that is if you use those links, there's special sign-up perks available for you. I've set up different, promotional partnerships with several different brokerages. They're all regulated ones, and if you choose to use those links, you'll be supporting my channel, but also you get some nice perks out of it. So check out all the perks available down below in the description, and thank you guys very much for watching. Have a great trading week ahead, and we'll see you next time.